Dow on pace for the first back-to-back triple-digit gains in nearly 5 months. Can we hold on for the final hour?
Let's talk about that in our closing bell exchange today. Carol Roth, the author of Entrepreneurial Equation, is with us from Chicago. Keith Springer from Springer Financial Advisor out in California. Jonathan Corpina of Meridian Equity Partners is on the floor here with us. And Rick Santelli, of course, is in Chicago as well. Carol, you've been skeptical about this market. But if I read you correctly, any rally that's going on right now, you might want to fade. You're not too convinced that the long term looks all that good right now. Am I right?
Well, I think what we're going to get a deal, but the deal isn't going to solve our problems. And so in the short term, everyone's going to be very, very excited about this. We have a deal, uncertainties off the table, we're printing money. I think that's going to be very good in the short term. My problem in the longer term is the long-term drag from all of these companies not investing today. They're doing share buybacks, they're doing special dividends, they're not investing in their companies. So in the short term, it's going to be fantastic. I just don't know what's going to happen in the long term, Bill.
Yeah, I wonder what's going to happen in the short term, actually, Keith. I mean, we don't have any specifics on the table once again, and here we've got this hope and optimism in the market. Do you think we're actually going to flesh this out and get a deal by next week?
Maria, I think absolutely we are. I think it's celebration time on Wall Street. I think they're celebrating a deal almost being done. We're pretty much in a position of buy the rumor right now. I am afraid a little bit when the deal comes through, we're probably going to get a sell the news, a little bit of a sell-off. But with all the Fed printing a lot of money right now, I think it's going to be very positive over the next few months. I agree. Next year is going to be a difficult time. This is going to mean austerity for our country. Higher taxes, lower spending is certainly going to affect corporate earnings. And the one thing I am a little bit more nervous about here is complacency. People are getting very complacent here, Maria. And that's the thing that bothers me the most, because I think the market never goes down when everybody expects it, but people are starting not to worry too much.
That's what I'm saying. It feels like there's a lot of complacency, and we've got all these expectations, but yet to see anything really materialize.
What do you think, Jonathan? Is that the case here?
I think everyone's kind of grasping at straws at this point right now. What's happened in Washington is that there's been this game of chicken, and no one has decided to blink. So now people are blinking, showing their cards a little bit, and the market is reacting positively to that. But at some point, when we get down to the nitty-gritty of what's going to be there, I'm not sure everyone's going to be so satisfied that the deal that's going to be put in place is really going to help us moving forward first quarter, second quarter next year. Everyone's investment horizons have been so shortened by what we've lived through over the last 4 years that we have to look a little bit further down the road.
But Rick Santelli, boy, it's very much a risk-on market right now when you consider the yields and treasuries are going up, the dollar index is going down, the price of gold is going down sharply. I mean, it's very much risk-on right now, isn't it?
It is, but there's nuances to everything you said. You know, if you look at yields on 10s and 30s, we're at 2-month highs. I do think at the top of the show, you said equities are at 2-month highs. They continue to correlate. In terms of commodities, well, commodities are finding that ultimately demand really does make a difference, and a weaker dollar isn't the only variable to higher commodities, not the least of which to mention profit taking on some of these commodities like gold. And my final point is, you know, if anybody out there still thinks that because the Dow or the S&P or the NASDAQ's going up, that the economy is firing on all 4% GDP growth cylinders, wake up! So to use that as a divining rod for the fiscal cliff, in my impression, is a bad idea.
Let me tell you, today we've got the banks up once again. We'll talk to Meredith Whitney in a little while about her upgrade of the sector yesterday. But, Keith, is this an area you want to put money into, or do you think these stocks, I know they've had a very good year on the heels of a terrible year the year before. What's your take on financials?
Financials are a buy here. I think they're attractive because of the spread. The Fed has made sure the financials are not going to lose money. They've put a put in under them. They've made largely the ability for them to borrow at zero, and any profit on there is attractive to financials. I think down the road we have a problem when we start pulling money out of the bond market. The Fed has really spurred economic growth in housing and mortgages, but when they start raising interest rates and no longer add money to the market and housing, we're going to see a pullback, and you're going to see more defaults. I think that's where the banks come into trouble about a year and a half from now. But for right now, I think they're very attractive.
And Carol, it's not just the financials. You look at other sectors. Consumer discretionary is at a 52-week high. The airlines have set 52-week highs 5 days running. Yes. Housing stocks have been on fire. And, all of these seem to point to a continued growth for the economy, but you're still skeptical.
I am skeptical. What I do think we'll see is I think we'll see a shift once the uncertainty comes off the table, so to speak, or at least the perception of uncertainty. What will happen is people will come out of defensive stocks that are very highly valued right now, like consumer staples, like utilities, and probably go into companies that have more foreign exposure, maybe technology, to chase that growth. So I think that you will have a little bit of turnover in terms of the types of investments that the market's going to be going after.
In terms of broad economic issues in 2013, what kind of a year are you looking for, Jonathan?
I think once we get into the first quarter, we're going to see some growth that's going to continue from what we've seen already in the past. Everyone's going to continue to watch this unemployment number, and as it's been trending in the right direction, everyone's been adding their figures and their keys to why it's moving one way or the other. But once we move forward there, I think that's going to help our markets move to a higher level there. The momentum that we've seen in this market is going to continue.
All right, we'll leave it there. Thanks, everybody. Really appreciate it. We'll see you soon.
Thank you.